Hello and welcome to Stocksies. Today we will talk about one of the most talked about stocks in the world, Nvidia. It is a company that not only affects the markets, but also the way technology, artificial intelligence, gaming and data centers evolve. In this video, we will take a detailed look at the company's history, the course of the stock, basic financial data, the reasons why many investors choose it, but also the risks that we should not ignore. Stay until the end to see what recent moves by Nvidia may affect your investment decision. Let's get started. Nvidia was founded in 1993 by Jensen Huang and his colleagues, at a time when computer graphics were still in their early stages. Its original mission was to revolutionize computer graphics, primarily for gaming. Over the years, the company established itself as a pioneer in graphics cards, creating the GPUs that are now considered industry standard. Gradually, Nvidia realized that GPUs were not only useful for graphics, but also for heavy computing tasks. This paved the way for its entry into areas such as scientific research, data centers, and later artificial intelligence. This strategic shift was also the point that transformed Nvidia from a gaming company into a technology giant. Today, Nvidia is one of the largest technology companies in the world, with revenues in the tens of billions of dollars and strong profitability. Its revenue comes mainly from three main areas: gaming, data centers, and artificial intelligence. Data centers and AI in particular are the fastest growing pillar of the company. Nvidia also has a strong cash reserve and high profit margins, which allows it to continuously invest in research and development. For the investor, these figures indicate a company with financial stability, but also an aggressive growth strategy. Let's now move on to the most crucial part for every investor: Nvidia's stock performance. This stock is a typical example of a growth stock, that is, a company that reinvests most of its profits with the goal of future expansion rather than a high dividend yield. Since its listing on the stock exchange until today, Nvidia has recorded one of the most impressive long-term returns in the technology industry. Over the years, it has carried out several stock splits, which did not change the value of the investment, but made the stock more accessible to private investors and increased its liquidity. Focusing on the last 5 years, Nvidia stock has seen explosive growth, with a total return exceeding 1,000%. Simply put, an investment of €1,000 5 years ago would have turned into over €10,000 today. This trajectory is directly linked to the rise of artificial intelligence and Nvidia's dominance in AI chips. Even more interesting, however, is the analysis of the last year. The stock moved in a fairly wide price range, clearly showing the volatility that characterizes high-growth stocks. During the year, Nvidia recorded significant highs near $210 to $212, which were historical highs for the company. At these levels, its capitalization touched historical records, reinforcing the narrative that it is one of the most powerful technology players in the world. At the same time, there were also periods of correction. At several points during the year, the stock fell towards the $170 to $175 zone, mainly due to concerns about the high valuation, but also due to news related to geopolitical restrictions and possible regulatory interventions in the AI chip market. These movements show that, although the long-term trend remains upward, the path is never straight. The current share price is hovering around $180 to $185, levels that many investors consider a stabilization phase after a strong upward period. This price range reflects the market's attempt to balance high expectations for Nvidia's future with fears of possible overvaluation. News about the company also played a significant role in the stock's movement during the year. Announcements of increased demand for AI chips, new products for data centers, and strategic partnerships gave a boost to the price. Conversely, news about export restrictions to China and general concerns about the technology industry caused short-term pressures. For a novice investor, the main lesson from Nvidia's course over the past year is clear. High returns are accompanied by large fluctuations. The timing of the purchase, the investment horizon, and psychology play a decisive role. Historical performance is impressive, but it is no guarantee of the future. Let's now look at the reasons why investors buy Nvidia. The main reason is Nvidia's dominance in the field of artificial intelligence. Most large AI models run on infrastructures based on Nvidia GPUs. At the same time, the company has a strong competitive advantage, both in hardware and software. In addition, the growing demand for data centers and cloud services strengthens the company's long-term prospects. Many analysts believe that Nvidia is at the center of a technological revolution that has just begun. Despite the advantages, there are also serious risks. Intense competition, geopolitical restrictions on exports, and the high valuation of the stock are factors that could negatively affect its price in the future. For this reason, Nvidia is not a safe stock, but an investment with high risk and high potential reward. Analysts' views on Nvidia are mostly positive but not unanimous. Many financial houses believe that the company is at the center of the next major technological revolution, with artificial intelligence and data centers as the main drivers. Several analysts maintain buy or outperform ratings, arguing that the demand for AI infrastructure will continue to grow in the coming years. According to them, Nvidia has a significant technological lead in both hardware and software, which allows it to maintain high profit margins. There are also estimates that speak of continued growth in earnings per share, with some analysts seeing double-digit annual growth rates. In this scenario, the current valuation is justified by the company's future cash flows and dominant position in the AI space. However, there is no shortage of more conservative voices. Some analysts point out that much of the future growth has already been built into the share price. This means that any disappointment in financial results or slowdown in demand could lead to sharp corrections. Special mention is also made of geopolitical risks. Restrictions on exports of advanced chips to China are a factor of uncertainty, as this market is particularly important for the company's revenues. If these restrictions intensify, they could negatively affect future growth. Overall, the picture emerging from the experts' opinions is mixed but optimistic. Nvidia is considered a leading company with enormous prospects, but also with high investment risk due to valuation and external factors. For the investor, this means that a clear strategy, discipline, and a long-term perspective are required. Nvidia is without a doubt one of the most impressive companies of our time. But the question remains, can it continue this path for the next 10 years? What do you think? Write your opinion in the comments and tell us if you would invest in Nvidia today. If you liked it, press the like button, subscribe to our channel, and press the bell to be notified of our new videos.